Alright, let's dive into something that's got the financial world on the edge of their seats today, the US dollar index and its dance with the upcoming non-farm payrolls, NFP, release. But before we get into the nitty-gritty, let me ask you this. Have you ever wondered why a single data point can send markets into a frenzy? Personally, I think it's because these numbers aren't just numbers. They're a pulse check on the economy, and right now, all eyes are on the US labor market. So, here's the deal. The US dollar index is sitting pretty at around 99.92 as of late European trade, but don't let that calm number fool you. The real action is in the anticipation. Investors are waiting with bated breath for the July NFP data, dropping at 12:30 Greenwich Mean Time. Why? Because this isn't just about jobs. It's about what those jobs mean for the Fed's next move on interest rates. And let me tell you, the Fed's been leaning hawkish lately, with 3 members voting for a rate hike in July. So, if the NFP comes in weak, say below 80K, it could throw cold water on those rate hike expectations. What makes this really interesting is how the dollar reacts to this. Will it weaken if the jobs data disappoints? From my perspective, it's not just about the number itself, but the narrative it builds around the Fed's policy path. Now, let's talk technicals for a second. The dollar index is trading below its 20-day EMA at 100.46, which is a bearish signal. The RSI is hanging out below 50, suggesting downside pressure. But here's the kicker. There's a key support zone around 99.49 to 99.48. If we break below that, we're looking at a potential drop to 99.00. On the flip side, if we close above 100.46, it could signal a reversal. What many people don't realize is that these levels aren't just random numbers. They're psychological thresholds that can trigger herd behavior in the markets. But let's zoom out for a second. The NFP isn't just a number. It's a story about the health of the US economy. A strong NFP means more people are working, earning, and spending, which could fuel inflation. And if inflation heats up, the Fed might tighten policy, boosting the dollar. Conversely, a weak NFP could mean the opposite. What this really suggests is that the NFP is a double-edged sword. It influences both inflation and interest rates, which are the twin engines driving currency markets. Here's where it gets even more fascinating. The NFP doesn't just affect the dollar. It ripples across other assets too. Take gold, for example. Higher NFPs typically weigh on gold because a stronger dollar makes it more expensive for foreign buyers. Plus, higher interest rates make holding gold less attractive since it doesn't yield interest. But here's the twist. Sometimes the market focuses on other parts of the jobs report, like average weekly earnings or the participation rate. If you take a step back and think about it, this shows how markets can cherry-pick data to fit their narrative. One thing that immediately stands out is how much the Fed's actions are tied to the single data point. The Fed's dual mandate is full employment and 2% inflation, and the NFP is a key metric for both. But here's the broader perspective. In a globalized economy, the U.S. labor market doesn't just affect Americans, it affects everyone. A strong U.S. economy can lift global growth, while a weak one can drag it down. So where does this leave us? Personally, I think the NFP release is going to be a pivotal moment, but not just for the dollar. It's going to set the tone for risk sentiment across the board. If the number comes in strong, we could see a risk-on rally, but if it disappoints, risk assets might take a hit. What raises a deeper question for me is how sustainable this focus on a single data point is. In a world of AI and big data, are we putting too much weight on one number? As we wrap up, here's my closing thought. The NFP release isn't just about jobs, it's about expectations, narratives, and the delicate balance between growth and inflation. Whether you're a trader, an investor, or just someone trying to make sense of the economy, this is one of those moments where the world holds its breath. So what do you think? Is the market overreacting to the NFP, or is it the most important data point of the month? Let me know in the comments below. Until next time, stay curious and keep questioning the narrative.